John, so good to see you. Today, we're going to talk through 76 years of headlines, what market history teaches us about staying invested. From oil embargoes to global pandemics, the S&P 500 has endured decades of uncertainty and come out stronger over time. So let's break down the data and talk through whether pre and post retirees should make any changes to their portfolio. And let's start by taking a look at this chart. What stands out to you about how the market responds to global events?
Yeah, I mean, I would say the first instinct that comes to my mind is they get defensive.
Mm.
Where you have to be really careful is when the market starts to get irrational. That means that people are looking at the news and they're reacting to it and selling things when they maybe perhaps if they were just a little patient, they didn't. And so really what you want to do is just make sure your portfolio is structured in a way where you can adapt to a lot of that.
And I understand that staying the course and staying invested is often the best advice. But if I feel uneasy about how I'm invested, when is the right time to make changes to my portfolio?
Well, I think whenever you're starting to get that sense, I think it's important to reach out to your advisor so that way your advisor can kind of walk you through and let you maybe you're thinking about things that maybe really aren't factual. And so a
Mm.
lot of times, if you talk to your financial advisor, it can sometimes put your mind at ease. But either way, you should never be up at night over your investments. And so if you feel that, reach out to advisor. And if you wanted to reach out to us, we would be happy to answer that question. But also just walk through you so that way you're comfortable. And again, you should be able to go to sleep at night, not worrying about your investments.
Yeah, absolutely. And how does that answer change for someone who is nearing or recently retired?
It is very important. As as you get closer and closer to retirement, the last thing you want to do is the market dip, and then you can't retire, or you feel like you have to go back to work. And so, what is really important, maybe within 5 years of retirement, you really start to talk to an advisor and see what are the opportunities out there to get your portfolio set up so that you have some upside, but you also are prepared so that way if there was a downturn, you it doesn't necessarily affect your decision to retire.
Right, really good point. And that brings us to my next question, which is sequence risk. For people who are nearing or recently retired and they retire in a down market, this presents a very unique challenge. Can you explain sequence risk, please?
Yes, and really the sequence of returns risk, it just has to do with when you go to retire and you stop that income coming in. If you depend on that 401k to be your income from the point you end up retiring, you want to make sure you're set up so that way the market doesn't dip on you as soon as you come out. So if the market were to dip down 30% and all of a sudden you're starting to take your draws, you are now selling out of that market at a bad time. But
Mhm.
really what I want to do is prevent that. And so again, that kind of goes back to that 5 year window that we're talking about is get a hold of your advisor 5 years before you're looking to retire and start to put that picture together so that way that event doesn't happen in your life.
Okay, so how do you guard against sequence risk? Because we can't really, control the markets, but how do you guard against sequence risk?
Correct. We never know when the market's gonna go up or down, but
Right.
we do know when we're gonna retire. So what we can do is set the environment up to make that happen. One way we can do that is in-service withdrawals. The other is maybe we take a little bit of risk off the table, during some good times. So I think it's just one of those things where you gotta find out what is good for you, but really control the controllables. You can control when you're gonna retire, and you can control what you're invested in at that time.
Right. Well, John, if somebody would like to come to you and create that plan, if either they feel uneasy about how they're invested or the headlines right now, what's the best way to reach you?
Yes, 440-471-4300. Give us a call and we'll get you on the calendar. It's just important to get ahead of this before you get retirement and or something happens in the market and all of a sudden you're working for 5 more years than you really wanted to. And so just get
Absolutely.
it set up the way you want it.
Great. John, thank you.
Thank you.